Thank you, Howard. Thank you very much for your time.
Well, it's a pleasure to be here with you, Ivan.
So we all know that what happened in the past 2 months in terms of the market movement is quite dramatic. We saw the quickest meltdown of the market and the quickest recovery in the market in the past 2 months. So how do you understand the extreme volatility of this market?
Well, it's very difficult. You have to have a starting point. And so my starting point was February 19th, that was when the market hit its high. Then the market, the disease came, the economy had to be put into a coma in order to try to cure the patient. Nobody knows what that means. Nobody knows if the GDP in the second quarter is going to be down 20 or 30 or 40%. But I think that the stocks fell, as you say, the most in history, 34% in just 5 weeks. And then, of course, the Fed and the government came out with their program, and nobody knows if it's going to be sufficient or effective. But it is the strongest program in history. The market certainly believes in it. And as you say, it had the fastest recovery. It was up about 27%. 23rd, in about 2 weeks, maybe 3. Now, so the question really is, how do current asset prices comport with what we think value is going to be? That's the hard part, because we don't know anything about the future. And one of the things I said to my colleagues is that we all have the same information about the present, but we all have the same ignorance about the future. We don't know.
You're right. You are cautious, but you said that in your last memo in March, which is named Calibrating. You said that it is time to go offensive, which is a turnaround of your previous position. So how offensive should we be now?
A lot of people took that out of context. And the next morning, I saw headlines. Howard Marks said buy. Howard Marks said go on offense. Not so. You have to read the whole thing. What it said is, if you have been defensive, now you can be less defensive. So if it's like a speedometer in a car, and it goes from 0, which is all caution, all cash, to 100, which is full risk and maybe using leverage, that's I would say that we have been at 35, and now maybe you could be 45 or 50 or 55 or maybe 60, but I'm not saying that people should be at 80 or 90, but what I'm saying is, if you have been defensive, I think it's now appropriate to be less defensive. I think I said in that memo, less defensive, maybe neutral, or perhaps even a little bit offensive, but certainly not risk-taking.
I think the previous low in March 23rd, just a month ago. So the past tell us that the market rally will not be a single line, and maybe in the future it will test a new low. So yes. Do you believe the March?
Well, here's what I believe. I believe that the past is what it was. I believe that 9 out of 10 declines were interrupted by a rally, and then the decline resumed. And in the memo, I think it was Calibrating, as I recall, I showed in the 2000 TMT bust and the global financial crisis, we had a decline, a rally, decline, rally, decline, rally, 5 stages. And so, and by the way, I said in that memo, it took 7 years to get back to the 2000 high. It took 5.5 years to get back to the 2007 high? Does it make sense in this horrible environment that we should get back to the all-time high in 3 weeks? Seems too good. So the answer is, so your question is, do I believe that we'll have, a relapse? I believe that we generally always have. I believe that it makes sense that we should. I always caution people to bear in mind that should is not the same as will. Mm-hmm. We can talk about what should happen, and I'm glad to talk about what should happen, but I never tell people that I'm highly confident that what should happen will happen, because sometimes it doesn't.
You strongly believe that there will be new low in the future. So my question is, why not just wait for the real bottom to buy?
Because I may be wrong. That it's as simple as that. It's as simple as that. People want to sell at the high and buy at the low, and it's impossible. And it should not be anybody's objective, because you can't find the high and the low. And what I would, since I'm a risk-averse individual, I would say, you want that merchandise, you want 10 of those. I'd say buy 4 now. If it goes down, buy 3 more. Goes down further, buy 3 more. But, this idea of sitting here and trying to figure out, well, wait a minute, is this the low or could it go lower? I just think it's a big mistake. And, if you buy some now and some if it goes down further, here's what you know. You have given up on trying to get it at the low, but you have avoided the possibility of not getting any on sale.
I'm very curious that during the last financial crisis in the year 2008, when Oaktree started to buy?
When? We started to buy the minute that Lehman Brothers went under.
That is not the real market bottom.
No, the market went, well, first of all, the market fell for the whole fourth quarter of 08. You may remember Lehman went under on September 15th. And we started to buy, I think, on the 18th or 19th. There was a weekend in between. The 15th was a Friday. We came back the next week and we started in. And we bought. And it went lower, we bought more. Lower, bought more. Lower, bought more. And we kept buying. And that way we were able to invest in our distressed debt funds $450 million a week for 15 weeks. If you looked at our purchase record, here's what you would say. Howard, you shouldn't have, and it covered 15 weeks. You would say you shouldn't have bought anything in the first 10 weeks. You should have bought it all in the last 5 weeks when prices were lower. But who knew? We didn't know prices would get down to those low levels. And maybe we sit on our hands for the first 10 weeks and then it goes up. Mm-hmm. And we missed it all. And so, you just have to give up on certainty. You have to give up on getting it exactly right. There's an old saying, perfect is the enemy of good. And if you try to get it perfect, you may not do a good job.
And you told Bloomberg that in March, you are a strong buyer. And now, we are almost close to the end of April. Are you still a strong buyer in April?
Well, there's been a massive rally in the things we were buying. In our buying was mostly March 9th to the 20th, which were the middle 2 weeks, which were the period of the biggest negativity, and on some days, even panic. And so we bought aggressively, and we bought large amounts. But then the government came out with its program, and the markets rallied very strongly. There's no more eagerness to sell. There's no more panic. So prices are not as low. Supply is not as great. We're not buying so much. We've shifted our attention from buying bonds and loans in the market to dealing with companies in trouble and lending them large sums of money to rescue them from meltdown. So we've shifted our focus.
You said that the economy will recover. The question is, how do you expect the shape of the recovery? It's like a V, it's like a U or W or a Nike logo. So it's
Yeah,
not.
I like that. I like that, Ivan, from your questions. The Nike swoosh. I think it's going to be. I think it's not going to be a V. V suggests down and back, and it's over. And I think that that's too easy. I think we'll have a kind of a W with an upward bias, or maybe if you think of the blade of a saw, jagged. Mm-hmm. I think it'll have an upward bias because people will want to go back to work. People will want to shop. People will want to have fun again. People will want to, return life to normal, and the government will encourage it. But I think it will be with what we call fits and starts, up and down, sawtooth. So a series of W's maybe, but with an upward bias, but not like this, more gradual.
Today we are in a different world now, but the world will back to normal someday, certainly. What matters today is what do we do in terms of finance, in terms of health, what do we do in between? So how and what to do?
Yes, well, look, as to health, we have to be smart. We can't, I don't believe in being so aggressive that we say, I'm Superman, I don't have to worry about the virus. I can go out and do my thing and get back to normal without worry. I think you have to allow for the uncertainty and the risk. Similarly, I think that you have to participate in the markets, but not like a strong man, not to say there's nothing to worry about. I think you have to respect the uncertainty, but I also think, as with the health, I think you have to move ahead. I can tell you one thing. We're getting much better bargains than we did 6 months ago. And 6 months ago, as you know, we were on the defensive, and we were hesitant to spend, and today we're happy to spend. In March, we were ecstatic to spend, but now we're still happy when the deals are right.
So thank you very much, Howard. Thank you very much for your time to do this.
It's always a pleasure to talk to you, and I hope all is well with you, and I hope that Shanghai continues to have very few cases.